We're going to do a video on Tesla stock, TSLA, Tesla stock analysis. We've got a daily chart of Tesla here for you with a blue 200-day moving average. And we can see, obviously, Tesla's in a bear market. And it put in a low this week of 166 here. This was Tuesday, the 22nd, and you can see at 166 down here, very close to our target. We're going to look at a 1 hour, a daily, a weekly chart with some moving averages on it, and then we'll show you some algorithmically generated entry prices, and we'll show you how to get those for free at the very end. So stick with us. Now, what we've got going on here with Tesla is not to gloat, but I put a price of 159 to 160 on Tesla, and I used this blue 200 week moving average as a guideline of what we're doing. And you can see this week that's 161 is where that is. I'm going to call it 160, and I called that back before it broke through this low here of 179. And I said if it broke through 179, our next support target was this 160, 159, and I'm still sticking with that. As you can see, it's right there on it, and I think because it's right there on it and really no other reason, I think we're going to get a bounce in Tesla. But let's just look at it from perspective. It's got 200 week moving average in blue, a 20 week moving average in red, and it's below that, and it's below the 5 week moving average in green. So Tesla's still in a bear market, make no mistake about it. But let me put an indicator on here real quick, which is a really interesting little indicator, a linear regression channel. It's a 100 bar. Remember, we're looking at a 100 bar going back. Let's get rid of some of this. Let's get rid of this 5-day. And see if we can put a 100 bar linear regression on here. This is a linear regression for weekly. Now, it's extremely interesting. You can see this is a 100 bar linear regression for a weekly chart. Look right where Tesla is right now, right at the bottom of its linear regression going back 100 weeks. That's almost 2 years. So the first thing, and I called it months ago, about 6-8 weeks ago, is 160 because of this moving average. It's 200 week moving average. But you can also see it's at the bottom of its linear regression channel going back 2 years. So you can see it doesn't respect it completely, but keep in mind it wouldn't have looked like this back here in November of 21. That was over a year ago. This would have been pushed straight up, would have been pushed angled up probably at about a 45-degree angle. So this automatically rotates and adjusts itself. But you can see right here that it's a very reasonable bet that we're going to get a rally in Tesla. And I suspect we're going to get a rally up here. Now, this is very speculative as to what we're going to get in terms of a rally. But in general, we're probably going to try to approach something around in here. And I'm not optimistic on Tesla, but 237 is this first level of resistance. I'm not saying it's going to go to 237, but I definitely think we're going to get up into here, this 220 range, if we get the rally I'm looking for. So basically what we would need is we would need this price to stop, not violate the 200 week moving average, come across it. It could violate a few bucks, say 155, but it needs to then come back up and get the 5-day, which I've deleted off of here, the 5-day moving average under it, and get the 20 under it to push it up to the $220 level. And again, you're probably talking $220 out here in February. I'm not talking about the near term. Now let's go to the daily real quick and see what this channel looks like here. Now, we can see that this is the same 100 bar, in this case day, 100-day regression channel. We can see that it had decent respect for it here, but keep in mind this is all in hindsight because this wouldn't have looked like this necessarily. But we can see it respected it here, it respected it here. And I suspect that this price 150, I suspect we're going to catch that support here, as we just mentioned, the 160 level, where it's a few bucks off of that, $6 off of it this week. So we're below, this is standard deviation, this is 2 standard deviations right here. And this is 2 standard deviations above. So again, daily chart. Let's go and look at the hourly. The hourly is a complete disaster for Tesla. You can see it's been below the 200-hour moving average all the way back here since September. And it bounced underneath or rose up underneath the 200-hour moving average and probably sold right off. But you can also see that it respected the regression channel here, here, and it's respected it here. I suspect we're probably going to get respect for it up here. And it just makes sense to me that we're going to get that. So Tesla settled here, it looks like last week at about the let me go back to this daily real quick and check it out, the 185-ish. So I suspect we're going to get a near-term sell-off and respecting this 1 hour channel, probably back to here, this let's call it the 170-ish level, and then get a rally up. Keep in mind, in order to get a rally up, we need to say 166 is our low, and we're not going to get to 160. Let's call this the low. We're going to turn this around, get the 5-day, which you can't see on here, under the price, get the price over the 5-day, get the price over the 20-day, and begin our march up here to 220, which is going to be right about here. So that's my forecast for entertainment purposes only, and it's all my opinion, but I'm looking more like January, February, if that's going to happen. Now, what's the alternative? It comes up here to fair value, barely to 200, and bounces back down and makes new lows. So it could go up here to the 200, 205, and come back down and hit the 160 or even 155. That can happen too. So we need to make sure that we understand if we're going to get a rally, you've got to get the price above the 5-day moving average and the 20-day moving average. This is the red line's the 20, the 5's not on here anymore. And you've got to get those underneath that on a daily chart here. And of course, they're going to follow much more slower on a weekly chart. So that's what I've got for you for Tesla. Let's take a look and see what RBAM Research says about it. RBAM Research puts out algorithmically generated entry prices every morning before 7. For tomorrow, the 25th, the day after Thanksgiving, Tesla's showing 0 across the boards for the non-trend following. Let's see what it says for the trend following. Saw something down here earlier. For the 30-day hold, tomorrow, the 25th, it's got a short at Tesla at 183.62. So the trend following is the 30-day hold, 30-day trading days. Worst case, close out at the end of 30 days at a loss, or take your profits as soon as you get them. And it's showing still shorts. It is interesting showing buy on the SP 500, which we had enormous volatility Wednesday, or at least I kind of thought it was enormous, not in terms of points moved, but in terms of it's bouncing all around and put in some good highs. So the SP 500, the overall market, is showing a buy, but still showing short in Tesla. So that's what we've got for you for tomorrow. You can get access to all of these entry prices every morning before 7 a.m. at rbamresearch.com. Free 14-day trial, no credit card required. Head over to the link in the description below to rbamresearch.com, put in your email address, and get free instant access to algorithmically generated entry prices for 190 stocks, the major forex pairs, and the most liquid futures contracts, all before 7 a.m. Monday through Friday. Everything you've seen and heard on here, including my analysis and the entry prices, are for entertainment purposes only. You trade at your own risk, and you should always do your own analysis. If you like this video, please click the like button. If you want to subscribe, please do that as well. And if you have a comment for us, please leave it in the comment section below.